Welcome back to Open Line. Happy to have with us Dan Smith. He's an economist at MTSU. He's director of the Political Economy Research Institute at Middle Tennessee State University. We're talking about the economy. A lot of talk about, are we headed toward a recession? And it's just good to talk to somebody who knows about this stuff and get some sense of what's going on. So let's go to the phones. Let's go to Marcus first here. Hello, Marcus.
Good evening. How are you guys doing?
Doing great. What's on your mind?
Yeah, I was basically calling. I know this guy is trying to basically tell us that there's no need to fear of a monsoon coming, but I see a monsoon coming, and every time I see the leader of the free world get on his Twitter rant and play this tit for tat with China, who basically is neck and neck with us almost, by some economists' theories, are already equal with us as far as it could be a tit for tat of who's the largest economy. Basically, I've already done what I need to do to transfer my funds from a 401k. I feel I see what I see is impending doom coming to our markets if things don't change. Our farmers are out there suffering, haven't suffered like this since the Reagan years back in the 80s. They're going through not just the trade tariffs, but then they've had a bad go around with the weather. You throw that into the mix. We're looking at some bad times, and we have a leader and his compadres up there who are basically looking out for those who are at the upper echelons of our society economically. And those people have taken those corporate tax cuts. They haven't some people have gotten raises, but for the most part, wages have still been pretty stagnant, and it's going to continue. And as long as that happens, those people on the entry levels will not be able to replace stoves, refrigerators, microwaves when they break down. They'll just get by with what they've got, and that's going to lead to our economy coming to a steady halt. It starts in those ways. And I hang up and listen.
All right, thank you, Marcus. All right. He's concerned about China and the trade war. A lot there, but I'm going to take that out of what you said. What are your thoughts on that?
I share his deep concerns about the trade war. When you're dealing with international relations, trade relations, there's a lot of money on the line, a lot of people's lives involved, a lot of mortgages, a lot of car loans and everything like that. And when you disrupt people's lives, it makes it really hard to plan, because so many business models depend upon international trade nowadays. People talk about Buy American, but it's nearly impossible to buy a good that's entirely made in America because we have such interconnected global markets. And actually, if you look historically, China has been improving its international freedom to trade. It's not as high as the U.S., but the U.S. has actually gone down slightly. So my recommendation is, if we do want China to improve, is to back off and reduce our own tariffs. We have tariffs against their goods. And people have to understand, fundamentally, when we buy something from China, what do they do with the dollars? They're pieces of paper with dead presidents on them, right? They don't want them. What they want to do is take those dollars and buy American goods or invest in American companies, stocks, treasuries. That's going to create American jobs. So even when you buy something foreign, you're creating jobs here in America, right? There's no other reason they would take that money. Even if okay, let's just say they sit on the money and don't do anything with it. That's silly. But even then, it increases the value of our dollars because now they've taken money out of circulation, and essentially we've gotten free goods. So to me, I just don't see the concern there. I think it's kind of a way to distract people, and people get all emotional, us versus China. But we should be celebrating having partnership, right? The more we integrate with China, the less likely they are to militarily attack us.
And so the president is trying to, China has a bunch of tariffs, and he's saying that's not fair, lower your tariffs, and we will remove the tariffs that he's putting on. What if China did come back and say, okay, yep, we're going to lower our tariffs? Would we then have a massive economic boom?
I think either country, even if just one country lowered their tariffs, would lead to more economic growth. It would lead to more exchange opportunities and more entrepreneurship, opportunities. I wish all countries would just eliminate all tariffs. And that's what you talk to politicians that support President Trump, and that's their argument, is that he's just negotiating real hard and that's his goal. I don't quite buy that. I think this is a bad strategy, and you're risking a lot of people's livelihoods on this gamble. And we'd be much better off just removing our own trade barriers.
And how long, in your opinion, do we have? So this has gone on for a while, and we've heard talk about this could be bad. But I mean, at this point, the economy, the fundamentals in many cases are strong. You know, how long do you think we have with this kind of trade war? Because that's the other thing Trump is saying, that he's trying to, this is a negotiating ploy and all of that. How long before this could have dire consequences?
Well, so far, since about early 2018, the Dow Jones has kind of been up and down within a kind of a narrow range of a couple thousand, and we've certainly seen stark declines, but then it's gone up again. But we haven't really advanced beyond. We've kind of been at the same level. Right now, I mean, if we keep doing this like small little things, I don't think it's going to cause a recession. The thing is that it could escalate very easily into something more serious, and that's what I'm concerned about. Is when the negotiations fail, do you double down on your bet, or do you back off and say, okay, we're not going to play this game anymore? And I don't see President Trump doing that.
And the other day he tweeted, "I hereby order U.S. businesses something." I mean, are we at that point? I mean, I guess you don't know how much longer we have. You're worried how it'll play out, but we're kind of playing a dangerous game, is what I'd take from what you're saying.
Yes, and to the extent the president actually has power to order something like that, that would create so much business uncertainty. I mean, that's something you hear about in like Venezuela, right? I mean, that shouldn't be happening here. It shouldn't even be talked about and joked about by someone in that type of position.
Let's go to Lucy. Hello, Lucy.
Hey, y'all.
Hey.
Hi.
Can you hear me?
Yes, ma'am.
Yes.
Go right ahead.
Okay. Well, hey, Professor, thanks for coming on. Donald Trump also called himself the chosen one. And anybody that comes from the continent of Africa that remembers and has studied their country's history on the continent of Africa knows that the Wahhabis and Standard Oil unleashed the chosen one back in the 1880s on the continent of Africa so they could get all those oil fields in the Sudan eventually by convert or die. So wherever that's coming from, I have no idea. But the man is the President of the United States. He's running his mouth, and that concerns me deeply. I've got a couple of things. You can pick whatever you want from what I'm getting ready to say to talk about. But these crashes, I would like to know if the SEC is investigating short sales. You know, the market from the crash of 29 is not done the same way. That it's not the same market. There was a book that a guy wrote that came out around 2003 or 2004. I heard him on an interview on NPR on Terry Gross's Fresh Air, and he talked about how the markets have changed. And we saw that follow up from his book to what happened in 2007 with these ridiculous derivatives. Y'all were talking about 10-year car loans. All this unsecured junk debt that people are borrowing money to fit into the middle class is not a way to run an economy. So I'm concerned about short sales. And here's the thing on China. This fake little tariff war that we're having with China, like we're hurting somebody in China, is a joke. China owns 49% of UBS Paine Webber, the world's largest bank. They've owned that, and UBS moved their headquarters over there back, in 2004 or something? And not only that, China owns so much of our debt in 2007. I think it was the Secretary of State went to China, to the Chinese Investment Corporation, who owns that debt and owns that percentage of the UBS Paine Webber, and begged them not to put a call on bonds and not to call off our war debt. And then in 2007, they bought like 80% of Visa, who sends out paychecks for Social Security and government workers in this country. So if China wants to, they don't have to drop a bomb. They can implode us by putting a call out on their debt and all these government bonds they have bought up. So what do you think about that, Professor?
All right, Lucy, thank you. A very great call. I mean, there's some great questions there. She wants short sales investigated. We can talk about that. But I like that thing she just said there. We can't hurt China. We can't win this. Could China harm us by calling back all their debt. I mean, what about this battle with China?
Yeah, so that's a very popular argument that people make, that we're in a, because China owns so much of our debt that they could simply start fire selling it and and bankrupt us. I actually disagree with that theory. I actually think that if they decide to sell our debt at low prices, we can buy up our own debt at fire sale prices, and then we'd be better off, and they'd be the ones hurting because they just lost all this money. In fact, the more they invest in us, the more they have to lose if the United States market goes down, right? So I say the more integrated the financial markets are, the more secure we are, and the less likely we are to get into military conflict. There's a famous French economist, Frédéric Bastiat, that said if goods don't cross borders, armies will. And I think this is relevant here. If you have strong economic relationships, then you're going to create ties and friendships and mutual shared interest. And that's what you need to create peace and stability.
Short sales investigated. All right, short sales are where you can bet, basically, you can say a stock is going to go down by a certain amount, and that gives you money. And is that a new thing? It was something that was certainly a big part of the last kind of collapse. Are we seeing them now? Have they been changed? Was that happening back in 1929 before that crash? What about short sales?
Yeah, so short selling has been part of financial markets for a long time. You could probably even trace them back to the coffee houses in London and Denmark. Not quite sure on that, but I'm pretty sure people figured this out really quick. To me, short selling actually helps create stability in the market, because market participants can say, I think this market's getting overheated. These stocks are way overpriced. The price-earning ratio is way too high. So I know this price is going to go down. I'm actually going to take a position and put my money in it, and that's going to drive. And what they do is they borrow the money and those stocks, right? And they say, I'll give you those stocks back. And then later on, they're going to buy up the stocks and give them back. So what they're betting on is banking. So when they borrow those stocks, right, and then they're going to buy them in the future, what that does is, if the price is overheated, it drives the price back down. So it's actually a way for market participants to say, hey, this is overheated, folks, and market participants start seeing that short selling. So I think it's more, people associate it with a recession because more people start short selling, obviously, because they think things are still overheated when things start going bad. But it's a symptom, and if we get rid of short selling, I think we'd actually create more instability in markets.
Interesting. All right. Thanks for both those. Thanks, Lucy, for calling in. Jeff and Bill, others, hold on the line. We're going to take a break. There's the number, 615-737-PLUS, 615-737-7587. Take a break. We'll be back right after this.